How many of you here are here for your first time to one of our events? Anybody here that's never been to one of our events before? Welcome, Dana, Neil. We're very glad to have you. I don't know how you know about us or about us, but we've been at this for quite a long time. We've been a Ninja Trader partner for many years. In fact, we've licensed so many indicators. We broke their licensing server and had to go and create our own because it couldn't handle the load. And that's simply just suggesting how long we've been around. So hopefully you'll hear something today that maybe might enlighten you a little bit, might be a little bit different than some of the other things that you've heard as you're pursuing your trading career. I'll tell you a little bit more about myself in just a minute. We're just going to let a few more people come in. There's always a big rush at the last minute for people coming in. They wait until the very last minute. So I'm going to give them just another couple of minutes, and then we're going to get started, okay? Again, thanks for coming. All right, so a couple of ground rules. I don't look at the chat, okay? It's very easy for me to want to stop and answer questions or comment on something that's going on in the chat, and I may tend to direct my focus to that and kind of get off track on what I'm talking about. I've been doing this for a lot of years now, and I know that I'm likely to do that. So I specifically do not read the chat messages as they're coming in. I cover them up, in fact, with another window so I'm not inclined to accidentally kind of look over there. Um, so I have a presentation prepared that I'm going to present to you guys. And in order to keep from getting off track, I want to just keep going, and then I'll stop at the end and answer questions. Now, Connor and Lisa, my associates, are here. Been with me for a long time. I don't think Praveen's here, but Connor and Lisa are here, and they can certainly answer questions for you in the chat. Okay, so don't, unless you have a question specifically for me, don't worry about putting questions in the chat. Go ahead and ask, and Connor, or Lisa, or even many of our other traders that are here could answer your questions also. In fact, if you have questions for some of our other traders about the legitimacy of what I'm speaking of at the moment or whatever, feel free to just throw it in there in chat. And I see a few of our traders are here, so I encourage them to answer you and answer you honestly. So with all of that being said, if you have questions specifically for me, hold them until the end, and we'll see if we have a little bit of time to answer them. We are having an event this Saturday where I generally have more to answer, more questions. So that being said, I'm covering up the chat now, and we're going to proceed. And again, thanks for coming out this afternoon. So you see the title of this event is called Reactive Trading, and you may wonder, well, what the heck is reactive trading? The markets are typically full of reactions, right? That's what price is typically doing. It's reacting to things. So how is it that we're different? we're not so much reacting to the markets directly. What we like to do is to patiently wait for something to happen, and I'm gonna go over this, what the something is. We're waiting for something to happen. When that something happens, the people that are trading in the markets almost always do something predictable. And they do it because they're human. And you do it too. Because you're human and you can't help yourself. So what we do is we wait for humans to react to the current conditions. When this reaction takes place, it's time for us to go to work. Okay, so all we need to know is when that happens. And it's really pretty simple. Now you want to think about it in a more simple term. What are all these people doing? They're waiting to react to a condition that exists that will cause them to do something. Okay? That's all they can do. They can talk about a bus, they can try to create a bus, they can analyze all the reasons a bus isn't there or why a bus might come there or whatever. But essentially, they have no control over any of that. The only control they have is to wait until the condition occurs. When the condition is right and that bus 25B south shows up, which is the one they want, not 25B north, going to make sure that the right bus shows up. And the toughest decision they have to make is this the right bus? Boom. They get on the bus and they go. That's really all we do. That's it. We sit around and wait for a set of conditions to exist. When that happens, we get up, we get in the trade, we finish the trade, we go sit down, and we wait. No major analysis going on, no crystal balling, saying that this might happen, and because this and this is going on over here, we may get this, and this line cross this one, and we have all these different shades of gray. No, we don't do that. So about me, I'm a guy who started this whole thing as a contractor. I was a very successful contractor, but my job was basically just putting out fires all the time. So it kind of wore me out, and I thought, well, hey, this trading thing might be a little easier. And so I thought, well, I'll just learn to trade in a couple of months, and then I'll be able to leave my contracting business and just sit quietly in a room for a couple hours a day and make all the money I want. So it seemed like a really good idea. And then 7 years later, and many thousands of dollars later, I was no further along than I was that very first day. Well, since then, some things have changed. I am now a professional trader. I'm not a contractor anymore. I've become a trading educator, system developer, indicator developer, and a bus rider. And that's really what, when you spend some time with us in the trade room, you'll understand completely what I mean by a bus rider. We do things a little bit differently in our trade room. And we're going to give you an opportunity to hang out with us if you want to. Okay, this Saturday, I mentioned we got something going on this Saturday. I'm going to take a lot of what I'm talking about today, and then we're going to go into a lot more specifics. So today, as we usually do on our Thursday events, a much more general discussion about what we do and why we do it. On Saturday, we're going to go into much more specifics about how we do what we do and why it works so well. Okay? So order flow and divergence are two of the most important things in trading, and we put those together to where when we have a confluence of events, the bus shows up, we know it's time to get on the bus. I'm going to show you some of these. Okay? So make sure, we call it our rock star trade. Oh, can you hear now? Connor, can you hear me now? You can't hear me now. Hmm. Okay. Sorry about that. I don't know what happened. I did start hearing a beeping sound coming from the computer. No idea why that happened. But okay, so we're all good. Everybody can hear. Okay, good. All right, so we're going to go into a lot more detail on Saturday. So please sign up. Okay, so here's kind of the background on what it is that we do here. And this is a good way for you to start thinking about this to understand why we have such an edge, okay? So you look at a crowd of people like this, and each one of these people has their own collections of thoughts, feelings, and emotions that are going on inside of them. Now, if you take this group and you try to figure out as a group what they're going to do by measuring their thoughts, feelings, and emotions, how many combinations of thoughts, feelings, and emotions are you likely to come up with? Probably more than millions, billions, trillions, I don't know, a number you can't count. So this is what we're generally trying to do when we're trading, is trying to identify what a large group of people are thinking and or feeling about price. Okay, remember what I said about this. Trading is what people are thinking or feeling about price. That's what makes the markets move. Okay? So if we can boil that down to a much fewer number of emotions or combinations of thoughts, feelings, and emotions, then we have a much better chance of understanding what the group is going to do as a whole. Okay? So for example, you look at this picture and there are very few combinations of thoughts, feelings, and emotions, you know. And having looked at this picture, I bet almost all of you know what would happen next. After the danger had passed, if you could look at this without having seen a video or whatever, you could probably envision what happens next. because we know based on having watched people that when something sudden and unexpected happen, they do something. Here in this particular picture, I'm thinking their hands are all going to go down as soon as the danger has passed, and that's our edge. Okay, so we're looking for events in the markets where we have an edge because of the relatively few thoughts, feelings, and emotions. Okay, so this whole thing is kind of a new perspective on trading for me when I started thinking about this. This is one of the things that we talk about in our AHA sessions, our VIP sessions. These are our group mentoring sessions. So I had a huge aha, and when I came up when I thought about this. The interesting thing about ahas is they typically open the door to other ahas, to other things that, it opened one door that you didn't even know was there. And all of a sudden, all of these new options are available to you. So rather than try to anticipate what this crowd is going to do over a long period of time, I decided it's going to be much easier to anticipate what this crowd is going to do immediately after a sudden and unexpected event. Okay? So when you see something that's like this, I actually see something that looks like this. I see a crowd that is reacting to a stimulus in a predictable way. And if they're reacting to predictably, then I know what they're likely to do next. Okay? So here's a picture of a chart. And this is actually what we're going to be going over on Saturday. This is a trade setup called a speed flash. This is our bread and butter trade. This happens all the time. In fact, I've got some video of it happening today. And we traded it in the trade room. But essentially what you're looking at here are people reacting to a sudden and unexpected stimulus. Okay? This sudden and unexpected stimulus happened right in here. And then they're reacting to it. The buyers are doing something specific. The sellers are doing something specific. But the net result is that price stops and turns. And there's our edge. Okay? And it's really easy to figure out. The thing is most traders ignore this because it's generally within a trend that they're trying to. It's generally an anxiety invoking type of part of the market, and rather than trying to take advantage of it, you're usually trying to avoid it in some fashion. Okay, and it can't be. Now, so what's happening here when we see these events? Let's talk about very quickly one of the ways, and I use this illustration all the time because it's important. And if you go and look at any chart, you will see this over and over and over again. And I've greatly simplified this process. But here's what's happening when the market makers are manipulating the markets in this fashion. You and I are sitting around thinking, oh my gosh, nothing's happening. The markets are dead. It's just boring. But what's really happening is right in here, the big boys have found a value area. They know that the price is that for this, whatever this asset is underpriced, and they should buy up as much of it as they can. Now, if they start buying up a whole bunch all at once, what does that do? That tells everybody that the big boys are buying all at once. And everybody jumps in, and it really screws up their plan. So they're going to do it very slowly, very quietly. We're going to be falling asleep while they're acquiring all these assets. So what happens is they acquire these assets, and then they kind of stop buying and selling for a while. They don't sell anything, and so that pushes price up a little bit. So they want to get it moving a little bit, so people are interested still interested in buying and selling with them. Otherwise, there's nothing going on down here. If they let it die, then their plan doesn't happen either. So they got to keep people interested enough. So they'll stop selling, which raises the price, which gets people interested again. Excuse me. So we get this big push because as soon as you shut down on supply, then demand goes up, right? That's what trading is all about. That's what charts are all about, supply and demand. So the price goes up, and then there's a value area in here where on these up thrust bars where people will start taking profits or they'll start getting stopped out. Price drifts back in here. They do some more accumulation up in here. They do the same thing again. They run it up. But now they're in an area where they feel like they're in their profit area. Now they are the largest holder of the assets for this particular instrument that are available in the market at this time. So they're the largest holder, so they control it. So what they're going to do, same thing as what they did down here when they were buying it up, they're going to start selling it very slowly and quietly. They're going to lull us to sleep. They want to keep people interested enough to trade with them, but they don't want anything to happen quickly. Okay, they want it very slow and steady. Okay, so we've just made it through this period of distribution. Right around in here, they've made their profits on this particular series of trades. This is where they make their money. It cracks me up when people talk about stop hunters out there when price shoots up like this because they think that these big boys give a crap about their stops. They're not. They don't care about your stops. They couldn't care less. They're not stop hunting. This is all part of a bigger picture. They've made all their money, but they're not done with us yet. Okay? They don't just quit here. They're setting us up for time. Now, even though they've made all their profits in here and they've distributed a lot of their assets, they still are the largest holder of the assets. And now what they want to do is they want to really clamp down on distribution. They're not going to be selling anymore. They're going to pull back from the market and price is going to shoot up because suddenly there is no supply, which makes demand go up, right? And then at the last second, they take all of those assets that they still had and they start dumping them on the market. Suddenly, this lack of supply becomes overwhelmed. Now, the supply has now overwhelmed the demand, and what happens? When there's more supply than there is demand, what happens with price? Whammo. And then guess what happens? They freaking do it again, over and over and over again. It's generally not this clean looking. Again, this is a simplified chart to make the explanation understandable, but this is where our opportunities lie. Okay? We get these pullbacks right here, these value areas where people start cashing out. Up in here, up in here, up in here. This is what we're looking for. Now, if you start looking at our trade setups as I go through them, you will see that almost every time there is a big push just before this little pullback. This is our sweet spot. That's all we need. That's our edge. Okay, I'm going to ask you a simple question. What's a trading chart? A trading chart is nothing more than a graphical representation of what people or institutions are thinking or feeling about the price of whatever it is, whatever the asset is, at a particular point in time. That's all a chart is. If you understand that a chart is a collection of thoughts, feelings, and emotions, then it makes it much easier to understand what it is that we're all trying to accomplish in the markets. Okay? Now let's look at the chart. Understanding that this is a measurement and representations of thoughts, feelings, and emotions. On the occasional and the occasional manipulations and the reaction from them are generally predictable. So what are people thinking, and when are they thinking it? That's all we need to know. That's all we need to understand in order to have an edge. Too many of us don't have an edge in trading. All we're trying to do is follow the squiggly lines, or listen to the guys on the TV, or listen to a trade moderator telling you push the button now, or looking for XYZ patterns or ABC patterns or candlestick patterns, or, we don't really know what we're doing. We're just trying to follow this vague set of ideas, of rules, of technical indicators to tell us what to do. Okay? This is where we're a little bit different. We're going to help you understand what it is exactly that you're doing it and why it works. So you'll notice here that this looks very much like that example I showed you, right? Where the markets are being manipulated one direction or another. For what appears to be no particular reason, you'll see price push. And you see the long bars, right? And then suddenly price stops and turns and goes the other way. Why in the world would this happen? Anybody have any idea? It just seems very random, doesn't it? It's actually, if you look closely at what's happening during the life of these bars, instead of just looking at a bar. This is why you'll never see me scroll around on a static chart saying, yeah, you see, when these conditions exist, then here's where your trade setup is. You'll never come to a webinar and see me scrolling around on static charts. I'll show you live charts, but you won't see me with my trading charts up, just kind of scrolling around, pointing things to you. All I'm doing here now is I'm just showing you a graphical representation of what's happening. So we've got a couple of things happening. Each time we see these points where price stops and turns, we have profit takers and we have people getting stopped out. Because there's only two kinds of traders in the markets. There's buyers and sellers. That's it. That's all there is. Buyers and sellers. So when price stops and turns, there's a good chance somebody made a lot of money, somebody lost a lot of money. Those are the only two things that can generally happen. That's why price stops and turns. Now all we got to do is figure out why and how to measure that. Well, here's how we measure it. Remember this? It's generally after a expected event. A big bar. When you see the big bars, profit takers are going to jump in, and they're going to at least scale some of their contracts out. All right, or the others are going to be taking a loss. But because it's so sudden and unexpected, I know what's likely to happen almost immediately. And I can get in and out of the market very quickly. All right, so I came up with these indicators to help us measure what it is that's actually going on in the markets. Let me show you. This was today. I'm going to show you this video of what in the trade room today. This is actually available on our YouTube page too. Connor can put up for that for you. Okay, so here's the trade. I got to scroll ahead. I'm going to show you this one first. I'm not going to put the sound on. You can watch this on YouTube if you want to watch the sound. I'm going to just talk about what's happening here. I apologize for this being blurry. This is the quality of the recorder that they give us in this trade room that we use. So it is kind of blurry. Now, first thing we see here, what did I just talk about? Look what's happening here. Look what was happening here, and now look what's happening here. Do you think back in here, anybody thought this might happen? This is a sudden and unexpected event. So we have a number of indicators. I'm going to talk about these indicators and why each one of these is important. But talk about those later. We have this big push. Prices dropping down onto a major area of support. I actually said, I don't know if you can hear this. Let's see. Perfect. Actually got it at the open. All right, so you see, I actually call out the trade. I was actually calling it ahead of time. On this bar, I was telling people what I was going to be doing if the bar opened 5 ticks or less from this support line here, and it did. See, that it was right on it. It was right at 5 ticks. I thought I got filled down here when it backed up, but it didn't. I got filled in here. So that's our edge. That's it, and then boom, up it goes. We got 5 ticks. It did something very predictable. This was me talking about, if you want to watch it on YouTube, this is me talking about the trade setup in the trade room. And you can see over here that other people took the trade and it was a winner. Now, we have another one setting up, but I'm going to show you that in a minute. All right, so don't forget to register if for Saturday. If you have any questions, I can answer someday, but Saturday will actually be better. So don't forget to register for that. Now, the indicators. You saw on that trade today that we have an indicator with an arrow. What that is the important thing to know and understand is when price is moving so fast. And when I say moving, I mean the orders being processed through the market. That they're being processed so fast that it's unlikely that retail traders have the ability to process orders that fast, to place and have them process that fast. So I was trying to zone in on where that might, what speed of orders being processed is likely and unlikely to be retail traders. Okay, so to do that, I had a program develop this histogram for me. We actually still have this histogram. It ships out with our speed tick indicator. We don't trade with it on the charts anymore, though, but we do ship it out if you want to use it. So what I did with this histogram was I started looking to see if I could see anywhere where something is happening, where speed of the orders being processed was at a point where whenever they reached a certain speed, there was very likely some sort of a pullback that happened right afterwards. Okay? This was one of my first attempts at building an indicator. And the programmer sent it to me, and I put it on the very first chart. I didn't tune it. I didn't do anything. I just put it on, and all of a sudden, it was like the clouds parted and the sun came. It was the most beautiful thing I'd ever seen because I was able to, on the current bar, read what was happening here. If I know what's happening here, I know what's likely to happen next. Now, I use this same histogram. I noticed that Maybe we didn't reach a certain speed, but we accelerated so fast. Say well, how the orders are being processed very slowly, but suddenly the orders are going through very quickly. Maybe they didn't reach the threshold of the speed to generate a speed tick, but they did. It was kind of like this, is kind of like a drag racer. But they did accelerate so quickly that it caused a sudden and unexpected event, and price would turn. Okay, so this is our ricochet indicator, and also it's reading the flow of orders that are being processed. Okay, so we're just going to print a very simple symbol on the chart to tell you that a condition exists. Now, our indicators don't tell you to do anything. They indicate. That's why they're called indicators. Too many people get into trading thinking indicators tell you what to do. Indicators only indicate that conditions exist and giving you tools to make decisions from. Okay? Keep that in mind. I know that some of you are new here and you haven't heard this before, and maybe this is new information to you. I don't know. We have some more indicators that we're going to talk about on Saturday that I want to show you before I show you another video. For those of you that don't know about divergence, it's probably my favorite technical indicator in trading. However, it is underused because divergence is very hard to see with the naked eye without a lot of training. You have to really practice and understand divergence and know exactly what it is that you're measuring and what you're looking at. But essentially, to make it very simple and easy to understand, divergence is when momentum and price do not agree. Very, very important for one simple reason. When they get out of agreement with each other, and you can see where price is setting a higher high, but the momentum is setting a lower high, they are out of agreement with each other. When that happens, price will almost always try to catch up with momentum. So there's a turning point for us. Very, very important part of what we do. Now you could, this is a very typical, if you're trying to learn to trade divergence, you might find indicators that look like this, and they're almost, it's almost as difficult to use indicators like this as it is to see it without any indicators. So what we've done is we've taken the information from the indicators, removed the indicators from the charts, all the lines and stuff, and we give you something very simple. A little lightning bolt. This is our flash indicator. A little lightning bolt to suggest that there's a divergent condition that exists in the market right now. Meaning that price and momentum are out of agreement with each other, and when that happens, there's a very good chance that price is going to follow momentum. All right, same thing. This is our McDiver. You can hardly see these little dots here. Same exact divergence algorithm, but instead of using the RSI oscillator that we, momentum oscillator that we use for the flash, we use the MACD oscillator for the McDiver. Works very well. Now, we're using the same algorithm for each, and we started noticing this is just crazy good. So what I did is I took that algorithm and I applied it to total of 7 different momentum oscillators. This is our Super D. This will give us signals of 7 different types of divergence, or it's the same type of divergence. It's coming from different momentum oscillators. Okay, so we'll talk more about that on Saturday. All right, so let's go back to what happened earlier today. We have another trade setup. It happened just minutes after the one that we were trading, or a minute. But it was a beautiful setup. Price slams down. Look how push this momentum. Look how hard price is pushing. We're measuring exhaustion. I'm going to talk about that in a minute. We're looking for a little bounce, and that's it. That little bounce is our edge. Are we going to get rich on this trade? Nope. Can we do this predictably and reliably over and over and over again? Yeah, because it's really easy. It's really easy to see and understand when this is going to happen. All right, so some more indicators that you'll see. Velocity, we're looking to measure when price is moving a lot inside of a bar. Okay, we want to see some strong velocity. We're looking at our major areas of support and resistance. You saw in the video that I'm looking for an area of support or resistance behind my trade to give me a little bit of extra confidence that if the trade does go against me, that support or resistance can help to hold it. Now, some of our trades work so well that many of our traders don't use the support and resistance behind their trade. I'm somewhat of a conservative trader, although not completely conservative. I prefer to have a safety net behind my trades. Okay? Price being overbought or oversold. This is a huge indication that price is likely to stop and turn, or at the very least, pull back a little bit. If you, again, you have to use a momentum oscillator. And if price, or if the oscillator exceeds the extremes, then you have an overbought or an oversold condition. Well, for me, having this on the chart was an awful lot of real estate taken up and another place for my eyes to have to go to qualify a trade. So I took this information and applied it right to the bar, right where my eyes are looking at the moment. And if you'll notice on the video, and I'll show you again on the next one, these bars change colors on the current bar. These don't repaint like several bars later. All of our indicators do that. Pullback alert. This is based on what I was talking to you about a little earlier about these market manipulations. The interesting thing about measuring on inside of each bar, there's a lot of information. Now, if you just looked at this chart, you might say that this bar looks like this bar, looks like this bar. You know, there's nothing to really differentiate when you're just looking at a static bar. What was actually going on? You see a lot of people reading volume. And then they come into our room and they go, well, how in the world can you trade without reading volume? Because they don't see volume bars on our charts. Man, I use volume like crazy, except I just don't need a histogram taking up space. And I only want to know the important volume. Important meaning that the volume that happened inside this bar was such that the buyers and sellers actually got into a fight inside this bar. The buyers were in control. The buyers and sellers started fighting, and that typically leads to a price turn. So I'm only looking for particular kind of volume. The rest of it, I don't care. I don't need to look at it. I don't need to know about it. Okay? So we're going to talk about our setups real quick here, or the one that we're going to talk about on Saturday. And I'm going to give you, or try to give you an understanding of why what we do is very simple and straightforward. We make this, and I had this. We actually talked about it in the trade room today. As we have a new trader. I don't know if he's here today, but we have a new trader, and he's still learning. And I wanted to make sure he was understanding that there's a process to qualifying a trade, and it's really simple. If step one of the process exists, then we go to step 2. If not, then we go back to the bus stop and we sit down and wait. If step 2 exists, and then we go to or if it doesn't, we wait. If step 3 exists, we keep going. If it doesn't, we wait. And it's a very simple qualifying process. So here's what it looks like, okay? And you've already seen it on a couple of videos. We have strong, I'm looking at this video picture now. Look at that. That happened today. That looks a lot like that, doesn't it? This is what we're looking for. We have strong momentum. We can read this momentum by looking at the color of these bars. These will go from dark bars to lighter bars as the momentum gets stronger. Momentum can only be sustained for a short period of time. And then it has to pull back and rest, which is why we're looking for strong momentum because, wait, where's Bob? Bob, are you here? I don't know if Bob is here. He's the one I was talking to this morning. There's a reason that we're measuring momentum. Because we're looking for a potential area of exhaustion. When exhaustion sets in, we now have an edge. So if you can measure, like watching a sprinter, we can watch a sprinter in a track meet, and we can watch them all run the 100-yard dash as fast as they can go. We know at the end of that 100-yard dash, or I guess it's called 100 meters now, huh? That's about as far as they can run at that rate. If they tried to continue running at that rate for an extended period of time, they'd run out of gas and they'd have to stop and rest before they could do it again. This is exactly what's happening here. This is why we measure it. Okay, so we're step 1 of the qualifying process. I need some strong momentum, and without it, I don't have the potential for exhaustion to continue to look for step 2. Step 2, I want to see some strong velocity and an overbought condition or an oversold condition. We print it right on the bar where you're looking, so you don't have to try to figure out, is it overbought, is it oversold? I'm not sure. It kind of was. It was close to the line. It was touching the line. Was it over the line or was it not over the line? I don't really know. There's no gray areas here. It either is or it isn't. Then we're still searching for more areas of potential exhaustion. Price took off, and we got a cachet. And inside that bar, the buyers and sellers were fighting each other. Okay. Then we have a major area of support or resistance. Okay. See all this? This was this morning. Okay. And then ideally, we're going to have divergence and a trigger that suggests that the orders were coming through so fast that it was highly likely that that bar was manipulated. Okay? We see it all the time. We saw it today. Let's see, what's the next one? All right, look. This is this happened today. You know, I did these slides 2 years ago. The slides I'm showing you, the setup, all of that stuff, those are probably 2 years old. This is today. All right, so we got a strong push. We have the momentum. We have a speed tick. We have an oversold condition. We have major support. Next bar opens above, right there. That's where I put my trade on. Boom, winner. That's all I want. That's it. I don't know how far I don't know if this is the beginning of a reversal or just a quick pullback like this one was before it continues to go on. So I don't know what it is. I have a higher probability of getting really, really good at this, getting 5 ticks out of this, and getting so good at it that my account grows enough to where I can now place 2 contracts on this trade. And then my account grows, and now I do 3 contracts on this trade. And this is all I need. This is all I need. I don't need these long runners that people try to convince you that you need. All right, and here's a trade that Connor took, a speed flash trade, and it was a winner. I think he entered right here. You speed tick with a flash on the open of this bar. Now, what happens after this? After he hits his target? Who cares? He's done. He's out. Could be a reversal. Price could continue to drop. We don't know. We don't care. We know where our edge is. All right. Last time. Sign up for Saturday if you miss this or don't have the link or whatever, or you're watching on video or whatever. You can always send us an email at bunt@theintentionaltrader.com. Now, we talked about the trade room. Interestingly enough, we won an award for our trade room and didn't even know it. Nobody told us. We stumbled across it and found out that we actually won one of the Trader Planet Star Awards for our trade room. We never asked our members to vote on it or anything. We decided we're going to open it up a little bit and invite you guys to come in and hang out with us. I'm not a big fan of people visiting trade rooms to learn about what we do in our style of trading, because they come in with these assumptions and expectations, and they think that this is going to be the best way for them to learn what we do, and it's really the least efficient way for you to learn what we do. But on the other hand, I understand that people believe that this is a good way to learn. I have fought it and fought it and fought it. Finally, I'm just saying, anybody can come in. Just come in, take a free trial. Just contact us at bunt@theintentionaltrader, and we'll get you set up. You can come in and hang out for 5 days and see what we're all about. Okay? Got some special offers for you. This is we're going to give you our most popular offer first. We have a lot of people that will either do this offer or upgrade to this within a relatively short period of time. We've got our VIP package. That includes all of our indicators that we use in the trade room. It including the super divergence indicator, or the super D. We have unlimited access to our trade room, so you can come and go whenever you want. You know, there are no monthly recurring payments or anything. Once you're a VIP, you just come and go whenever you want. Anything that we ever use in the trade room that is on a trading chart will also get free. We actually have some pretty interesting NinjaTrader 8 tools that we'll be releasing in the next, I don't know, few weeks, I hope. And all of our VIPs will be getting those as well. We have a mentoring session every week where, trading, the actual mechanics of trading is 20% of what you need to know. Unfortunately, most traders believe it's 100% of what they need to know, or that it's 80% with a little bit of trading psychology involved. But they don't really want to do that. They just want to know when to pull the trigger. Okay? Unfortunately, if you believe that to be true, I don't have a lot of hope for you becoming a long-term successful trader. In my experience, my very painful experience, trading is 80% mental. We talk about these things, these ahas that I had that helped me turn my trading around from being a pathetic, struggling trader that had lost $1,000 to having some aha moments that created an entirely new perspective, entirely new way of thinking about trading. A way of understanding what it was that I was actually trying to accomplish. So I had these series of ahas. I actually didn't realize most of them at the time. I I was trying to create a mentoring program for some friends of mine that were traders, and ultimately Lisa and Connor and Praveen have all been through the program. Um, but I was trying to create this program to help them understand why I was not crappy trader anymore, and I was now doing much better than they were. And so I was thinking back on what changed for me. What exactly was it? And so in hindsight, I was able to see and understand a lot of the aha moments that I had. And so I started writing those down and realized, our VIPs need to know about this. So we have a session every Wednesday that we have for the VIPs. That's also recorded if you request the video. If you can't be there, um, we uh, we have a video link for you. Um, and this is a series that we do. It's about a 6-month series, and then we just repeat it and do it over and over and over again because that's how people learn things. We're not going to give you a whole bunch of videos and just say, here, go watch these, and you're going to be a professional trader. I actually saw one last night. I was looking at something else, and I saw uh, a guy offering an HD. That was his big claim: HD videos, um, mentoring on video. That's not how it works. So anyway, you get priority support, and we have a bunch of tools in our Fast Forward program that teaches you how to become successful at what we do. It doesn't give you a bunch of videos to watch. It gives you videos to teach you the work that needs to be done to be a successful trader and gives you the tools to do the work. Okay? Very, very, if I must say, exceptional program that's just not out there. The thing is about it is it's going to require work. And a lot of people didn't get into trading because they want to work. They got into trading because they didn't want to work. So a lot of people don't really care for this whole idea of working. Trading is a lot of work. Um, if you think otherwise, then again, I don't have a lot of high hopes for your future in trading. Once you get good at what we do here, I'll sponsor you in a Top Step Trader Combine where you can earn a funded account. There is a cost involved, but I'll pay for it when you're ready. And if you're not ready, then don't do it. But you can actually trade somebody else's money, which is kind of cool. All right, so we have another offer, a substantially reduced offer. We've got a set of indicators, and we'll also give you the unlimited trade room for this offer. If you did it on the website, it's $52.25. We'll do it here for $2,600. Now, one of the things that a lot of people like, very popular, is the PayPal bill me later option, where you have 6 months to pay. If you're interested in that, it's on the website. You could click to pay with PayPal. You can also get more information there. So feel free to take advantage of one of these offers, and we're always help you. We're a wide open door. Our Skype is always up. We have a very responsive. In fact, Connor is almost always on the website. If you go to the chat now button on the bottom right, Connor or Lisa or Praveen will be sitting there waiting for you to ask a question. And they're real people. Occasionally I let them sleep, but we have real people manning the website to answer questions for people. So if you got any questions, just let us know. All right. Yeah, and there's a good, if you want to take a look at the application for the Bill Me Later, there's a link to the application there if it makes it any easier for you so you don't have to go hunting for it. Or you can just, again, hit us up at bunt@theintentionaltrader.com if you have any questions, and we can hook you up with whatever you need. All right. So I made it. Look at that. Man, I'm good. 1 hour. Exactly. Yes, you can upgrade later. There is an upgrade cost, um, and it would be more expensive, but that's kind of the price to pay to kind of step in. And some people want to do it little at a time, and that's fine. We certainly understand that. It will be a little bit more expensive. But we do have a lot of people. Any VIPs here? Charlie, that depends on when the order is placed. Praveen, there's a couple of ways of going about it. When you place the order, you get an email. The email tells you the next steps. One of the very first steps that you want to take is to fill out a form that sends your machine ID to me, requesting licensing. I will then go in, and I have to do this manually. I can't do it. It's not automatic. I have to physically do it. So hopefully you do it when I'm here. Of course, I'm almost always here. I work in the evenings and whatever. So once you do that, I will license you and send you a reply email. In that reply email is a link to a file that you can download and execute. That file will install everything that you need. Okay? It'll install the indicators, it'll install workspaces, it'll install templates, it'll do all of that. Now, we provide that for you guys, and it works 99% of the time. Everybody loves it. But there are those people, and we understand, that are just not comfortable with computers. We understand that. Therefore, we have a guy, and he is awesome at coming on the computer, setting everything up for you, walking you through. Now, he comes on your computer via TeamViewer. Of course, that's with your permission, and you're there when this happens. Once he logs off, he can't log back on when you're gone. That password no longer works. So you have to provide a password via TeamViewer for him to log onto your computer and set it all up. But everybody loves working with Praveen. He's a very easygoing guy, very patient, like to answer lots of questions for you. He's our go-to tech guy around here. So he can, if you need his help, all we do is ask for you to log on to his schedule and pick a day and time that he can come on and help you. But that being said, if you're comfortable just double clicking an installation application, it'll do itself. It'll work on its own. Yeah, that's the way I do it, Charlie, and that's the way a lot of our traders have chosen to do it, is to go for 5 ticks. And again, we're looking for that sweet spot because we almost always get a reaction where we expect it. Most of the time it's 5 ticks or more, but sometimes it's less. So 5 ticks is kind of the sweet spot. You could go for 7 or 8, but you're going to have fewer winning trades. Of course, the winning trades you have are going to be bigger. So, a lot of that balances out. My thing is I want to be out of the markets as quickly as is humanly possible, because that's the safest place for my money to be. The longer I'm in a trade, the more speculative that trade becomes, particularly this day and age when the markets are so manipulated by the big boys with these big supercomputers that are inside the exchanges. We can't compete with those guys. We can't pretend that this was 10, 15, 20 years ago when you could just put on an order and you ride it from low to high and take it off and make a bunch of money. Price, it doesn't work that way anymore. Yet people are still trading that way, thank God, because I get to take all their money all the time. So I want to be out of the markets as fast as possible. Um, NQ normally pull back quick with number of ticks than the, oh yes, much quicker. To be honest, we have the ES in the trade room, Charlie, and I don't know if you're an ES trader. Here's why we have the ES in the trade room. People think that the ES is a great place to trade. And so it's kind of a bait and switch, and I'm upfront and honest about it. We want you to come into the trade room because you're an ESer and you go, oh, well, they trade the ES, so I'm going to come in and I'm going to see the ES. They're going to trade the ES. And while you're sitting there waiting for a trade to set up on the ES, you're going to watch us trading the crap out of everything else and getting all these great setups. And suddenly your focus is going to not be on the ES anymore, and we've converted a lot of ES traders to trading the other instruments that move much better than the ES. The ES is just a big fat lazy cow, and I don't even look at it, to be honest. It's in our trade room, but I don't trade it because it's too slow. So the NQ, interestingly, the NQ and the YM, when the TF went to the ICE exchange, I know it's back now, but it doesn't have much going on yet. It's called the RTY now. But when the TF went to the ICE exchange, pretty much a lot of that liquidity went to the YM and the NQ, and so we started getting a lot better and a lot more trade setups on the YM and the NQ. And that remains the case at this point. Again, the RTY, which is the Russell 2000, is back to the CME, but no real liquidity yet. You clicked on the link, but no option to buy. Which link? Honor? Can you help him out? Tell you what, Charlie, click on our website at theintentionaltrader.com. As soon as you go to the website, in the bottom right-hand corner, a little chat that says chat now or chat with us. Click on that and start a chat, and Connor or Lisa will pop in and help you out. Any other questions? We're going to go into more detail on Saturday. Interesting thing, though, I mean, I can give you all kinds of details about how and why it works. Interesting thing, though, is that in order to use a tool, you don't necessarily have to know why and how it works. And I use the example of my wife and a car. I mean, she doesn't have the first clue what makes a car work. To her, a car works because of gasoline and a key. Those two things allow her to use that tool to its fullest potential to do the job that tool was intended to do. And that's exactly why we do these events on Thursdays, and then the more detailed events on Saturday. That's for the people that want to know. You know, the people that hey, Connor and Lisa, are you guys still here? Can you help Charlie out? Hello? Okay. Or go to our chat and they'll help there. So on Saturday, it's for the type of people that want to buy a car and they want to know what makes an internal combustion engine work. Okay? That is, that's what Saturdays are for. and I'm happy to answer the very technical questions on Saturday. So that's what we're going to be doing. Not as in depth this Saturday as sometimes, but we're going to go over why the order flow and divergence work so well together. Any other questions? Well, great. I'm glad you guys came and hung out with us this afternoon. I hope you get a chance to come either hang out with us in the trade room, but definitely come hang out with us on Saturday. Explain order flow again, please. There's a number of ways to go about doing that, Neil. I'm going to do that. The short version. I have a hard time with a short version. There's two people will actually, I can't do a short version. I will do it a lot more. Can you come on Saturday, Neil? Yeah, come on Saturday because I've already got that all set up. And it's not going to be the short version. I'm going to go into order flow in a lot more detail and the understanding of how and why order flow works the way it does. So I have to lay some groundwork for you to understand what I'm going to go into, though, and that is going to take a little bit of time, and I just don't have that time here. Bring a sleeping bag. Nope. The plan is 1 hour again with questions, so I'm going to do it the best I can to keep it on point. All right, everybody. Thanks again for coming this afternoon. I look forward to seeing you real soon, either in the trade room or this Saturday. Bye now.